Good morning, everyone. It is I, Curly K, here. It's also February 26th, and we are going to get into today's free trade idea. Now, what I see here, and of course, we're looking at Ulta, is that we have kind of been trading in what I like to call, and what my community knows me to say, which is a box of death. We're basically just range trading. Now, what has my attention on Ulta is that the XLY sector is kind of getting a move to the upside this morning. And I want to see if it wants to finally break out of this particular box. I cannot negate, however, that we do have this kind of shooting star candle that formed here, which is typically a bearish reversal candle. So I want to see if we're going to just pull to the bottom of that box or if we actually want to take off with the rest of the sector today if it continues to the upside. Also, I want to make, or I want to just pull in my chart just a little bit here and see if we have anything that's operating within that same little range. Because of course we want to see if we have any, supply or demand areas that we might want to pull out as well. And let's see. So what I see here is that there looks like there's a little bit of a previous demand zone, and we might actually be operating in that area. So as you can see here, we pulled down and popped up. We did the same thing here, popped up, did the same thing here. I can keep going. We did it here. We kind of came close over here. Um, we bounced off of that demand right there. And let's see where we are right now. So we're actually great. We're actually operating in that demand area as well, with a little bit of a lower level demand right here. So if we lose this, we could actually see, a little bit lower. Just wanting to make, notice of what I see so that I'm better prepared to navigate the market. So without further ado, let's go ahead and chart this thing out. Let me check one other thing before we move on. It could possibly go two up on the week. Definitely something to pay attention to. So let's just chart this thing right on out. So since we have a two up, and of course, again, I say this quite often, this is all strat talk. And if you are unfamiliar with the strategy that I trade, I do have videos on it. So please go and check my channel for the strat related videos. There are two different videos. And so now we have our call entry. And because we moved over to the 4 hour, we're mapping it out from the 4 hour time frame. And so let's just get a gauge of our magnitude. All right, so to the upside, we will be looking at, let's see here, 377.53. All right, and that will be our ATR target. And then to the downside, let's see what we're looking at. We're looking at 354 if we decide to pull down. All right, great. So now that we have our magnitude, this is going to allow us to see our strike prices. So we don't have any PTs or price targets to the downside because our ATR stops us before the bottom of that candle. And then let's just map out our upside targets. And we found this on the 4 hours, so it's going to be a 4 hour PT. It's almost looking like a pivot machine gun. And pivot machine gun basically means you have a series of five targets that are relatively close together. And the sound that the machine gun makes, it kind of takes out those targets in rapid fire like that. That's why you might hear people say a PMG or a pivot machine gun. But again, this is all strat related talk. So now what are we looking at here? So if we decide to move to the upside, and remember the ATR target, I say this in every video, the ATR target does not mean that we have to go all the way up there. It could actually move up a few dollars and then tank. But what it does mean is if it is the day that we decide to be parabolic to the upside, our target at which we would get exhausted would be 377.53. So choosing a strike price, if I were to choose a strike price to the upside, it would be anything in the money, which lowers your risk. Think of it like this: in the money does not remove your risk from you, it lowers it. Because if you choose, for example, a 365 contract, what happens if it pulls back to 360? Your 365 is now out of the money. So it has not removed the risk from you, it just lowered the risk. And so in the money, to 375 is what I would choose to the upside, and then to the downside in the money to 355. All right, you guys, so that will be all for this particular video. Also, if you are interested in seeing the performances of the other free trade ideas that I've posted, please be sure to check out my page on Twitter and Instagram as well as Threads. It is the same handle, iCurlyK. I hope to see you in baggage claim. And if you enjoyed this video, please remember to like, comment, and subscribe. I'll see you in baggage claim. Have a blessed day, an amazing trading day as well.